Hey everyone, welcome back to Corporate Decoder. Ever feel like a company report is trying to bury bad news under a mountain of jargon? Well, today we're digging into a report from Tempest Therapeutics, and spoiler alert, things aren't exactly sunny over there. We're going to see how they're cutting back to try and survive. The big news is that Tempest Therapeutics is making some major changes to how they're using their money. Think of it like a family deciding to sell their vacation home to save money. They're trying to make their cash last longer while they look at all their options for the future of the company. One of the toughest decisions they've made is to reduce their staff. They're cutting 21 out of 26 full-time employees, which is a huge cut. That's like laying off 4 out of every 5 people who work there. This change happened in April. The good news is that the company is keeping some of these people on as consultants, meaning they'll still be available to work, but not as full-time employees. Of course, letting people go costs money. Tempest estimates they'll spend about $1.5 million in cash. Most of this money is for severance payments, which is money paid to employees when they leave the company, and other benefits. They expect to spend most of this money in the second quarter of this year. However, this number might change. It could be higher or lower depending on what happens. There might be other unexpected costs that they don't know about yet. So what's the story here? Tempest Therapeutics is facing some challenges and is making big changes to try and stay afloat. Laying off a large part of your staff is never a good sign, but it seems like they're trying to be responsible and make the best of a tough situation. Now let's zoom out and look at the bigger picture. Tempest Therapeutics is a company that's trying to develop new treatments for cancer. They're in a tough industry where it takes a lot of money and time to bring a new drug to market. They're not generating revenue and spending a lot of money. This is why it's so important for them to manage their cash carefully. Their future is uncertain, and their stock price is not doing well. Tempest's situation highlights the risk in investing in small biotech companies. They often rely on just a few potential drugs, and if those drugs don't work out, the company can be in serious trouble. We can see here a good example of what happens when the money runs out. Now that we looked closely at the details and numbers, it's easy to see that the workforce reduction, it's a simple cost saving that can increase Tempest's chances of surviving in the short term. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more insights into the world of corporate filings.